The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Thursday, August 2nd. Welcome to another edition of Breakout Investing on TFNN. 5 days a week now from 3 to 4 Eastern. Getting ready to talk about this volatile stock market for the next hour. Number to use to get through is going to be 877-927-6648. 877-927-6648. My show airs daily, like I said now, from 3 to 4 Eastern. You can get the show as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming 24/7, right on your handheld device, your Android, your smartphone, your iPhone, whatever phone you have. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream anytime you want. And Tiger TV. Don't forget about Tiger TV. You can also watch Tiger TV on your handheld device, or if you're near your PC, you can go to TFNN.com, right in the carousel there. Go to Tiger TV, tune into the show live on Channel 1. You can look at charts right along with me and listen to audio, of course, of the show, and the show is archived on Channel 13. Okay, with that out of the way, let's take a look at the NASDAQ composite here. A little less than 1 hour to go in Thursday's session. NASDAQ Composite still holding above its 50-day moving average here, working on 4 straight declines. It really down every day this week. Finished near its session low. The prior 3 sessions, Monday, Tuesday, Wednesday, trading in the bottom half of its range again today. Down a little more than 13 points, call it 0.5% to 29.06. Let's check in on the S&P 500. See what the benchmark index is up to. It is also near its session low. Rough week for the market so far this week. S&P down about 13 points, 1% to 1362. A lot of market-moving headlines here. I got up this morning. You see futures pointed toward a sharply higher open. That's because investors were confident that we were going to hear specifics from European Central Bank President Mario Draghi. Unfortunately, we didn't get specifics. Listen, we all know that stimulus is going to happen. It's going to happen in Europe, and there's a very good chance it's going to happen in the U.S. when the Fed next meets on September 13th. Not a sure thing, but there's a pretty good chance. The economy on the home front is slowing. Of course, the economy in Europe not in great shape either. So stimulus is on the way. The market wanted some specifics maybe from Bernanke yesterday. It definitely wanted specifics from Mario Draghi today. And basically we heard more strong rhetoric from Draghi earlier this morning. Action is coming. Most likely bond purchases to stabilize borrowing costs in Spain and Italy, but nothing really specific. So I would imagine the I's are going to be dotted and the T's are going to be crossed in coming weeks, and we will get some sort of possibly even coordinated effort that's finally going to bring money in from the sidelines. But the market's action today, was I expecting worse? Yeah, maybe a little bit. I mean, the selling seems pretty well contained. Looking at some of these institutional quality growth stocks, including some in my ultimate growth stocks model portfolio, not getting hit really too hard today. So really, all eyes are going to be tomorrow on the July jobs report. That, of course, is going to be out tomorrow morning, 8:30 Eastern. Estimates are for payroll growth of around 100,000, with the unemployment rate holding steady at 8.2%. So I'll tell you what, how the market reacts to this number is anybody's guess. I think there are, as we've been saying in recent weeks, there are very good reasons for this market to go down. There are very good reasons for this market to go up as well. I mean, compelling cases can be made both ways. Remember, yesterday's show, I alluded to this Bank of America Merrill Lynch study of sell-side analysts. They do a monthly monthly study. They survey sell-side analysts, and that their index is at its lowest level in the 27 years that the data has been collected. So the sell-side analysts are extremely bearish. This could be a contrarian indicator. But listen, no one would be surprised if we get 100,000 print, 125,000 print, 150,000 print. The market's probably going to like that, and here you're going to have your shorts running for cover again. So can't rule out a good day for the market tomorrow, but who knows how the market's going to respond at this point. My general thesis, as I've been saying in recent weeks on the program, is what we know for sure is that there is still a lot of money on the sidelines that is unwilling to come in. And because of that, it's made for a very, very difficult environment, a very frustrating environment, not only for retail investors, but for also the big guys, the fund managers that are materially underperforming the market this year, hedge fund managers that are materially underperforming the market this year. It's tough, it's tough, and when it's tough and you don't have an edge, there's no need to force the issue. So I've been treading very cautiously with my Ultimate Growth Stocks model portfolio, keeping subscribers abreast of what's going on in this market. But I don't feel any need to be overly aggressive in a market that is tough to figure out. We know the uncertainty is out there, but without an edge, it's hard to buy stocks with confidence. And if you can't buy with confidence, you really probably should be mostly on the sidelines, and that's why I still have a fairly healthy cash position in the Ultimate Growth Stocks model portfolio. I do have I believe 5 names in there right now that some are working and others are just kind of break even, flatlining, not doing much, but they're really not showing signs that they're about to break down. If they do, I may be forced to protect capital, keep losses small. We'll cross that bridge when we come to it. But overall, the holdings that I have in there are not behaving badly at all. Okay, so the market reacting not so good to really a lack of news from Bernanke yesterday and also Mario Draghi today. Let's check in on shares of Knight Trading. This is KCG. And another very rough day for this stock. Loses about 65% of its value. Serious questions about whether this company is going to be able to stay in business at this point. Down 65.5% today to $2.39. There's been a precipitous drop for this stock. Of course, yesterday morning there was some very strange trading on a lot of NYSE stocks. I noticed, Watson Pharmaceuticals in my model portfolio. I saw it happening firsthand. The stock was down 4, then it was up 3, and then it was down another 4, and then it was up 5, and it was just craziness. Ended the day higher and outperforming the market, but a lot of volatility during the first few minutes of trading, and that was a night trading issue. The company disclosed that the fact that they had to exit erroneous trading positions early Wednesday that was caused by some sort of technology snafu. I'm not sure anybody has their finger on exactly what happened, but it cost the company about $440 million. So there are serious liquidity issues going on at Knight Capital Group, and how they're going to stay in business is very much in question, and that is, remember, this was a $10 stock. $10 stock yesterday. It's now a $2.39 stock. It's just amazing price destruction in Knight Capital. Did have a new issue today. I'm not going to pull up a chart because the first day of trading the chart looks kind of strange, but the ticker here is ELOQ. ELOQ. Eloqua, provider of on-demand software to basically automate marketing and sales initiatives at companies. They raised $92 million by offering 8 million shares at $11.50 at the high end of a proposed $9.50 to $11.50 range. I am going to pull it up just so I can get a quote here. Last I saw, the stock was trading around 13. Yep, 13.62. So priced at 11.50, trading at 13.62. So good first day of trading for Eloqua, ELOQ on the NASDAQ. Take a look at some other story stocks today. Start with Gilead Sciences. Gilead Sciences, strong day for the stock. You can see a big Big gap up for Gilead on Friday. Breaks out over a swing point of $54, up another 6.9% today. This stock is benefiting because of bad news at Bristol Myers, BMY. The company announced that it was suspending a mid-stage study of an experimental hepatitis C drug due to a serious safety issue. Well, Gilead and some other companies are also working on hepatitis C drugs, so this is good news for Gilead, and the stock is benefiting as a result. Gilead, again, up 6.9% to 57.33. A lot of retail news today. Let's take a look at some retailers that are performing well. Hey, you know what? Excellent turnaround going on at Gap today. Big gap up for the stock. Gap up 12.2% today. Unbelievable move for the Gap. That's trading at $33.03. Breaks out with conviction over $30 a share. I'll tell you what, boy, Gap was left for dead not that long ago, but they are making some decisions here. Very difficult to do what Gap is doing here, but they fell out of favor. Gap, of course, a big winner during the bull market of the 90s, and then the company lost its way, and now they seem to be resonating again with consumers. But same-store sales in July for Gap up 10%, much higher than expectations for 3.8% growth. Sales at Gap North America up 13% from a year ago. Banana Republic up 8%. Old Navy North America up 12%, and even International up 4%. So strong metrics all the way around at Gap, and the stock is benefiting as a result, trading all the way at its session high right now. We had a lot of other same-store sales results today, and the results were pretty good, actually. Discount retailers like Ross Stores, TJX companies, both up 7% there in terms of same-store sales. Macy's up 4.1%. That was ahead of expectations. Let's check in on Limited Brands. This is a company that, month after month, they deliver very strong same-store sales. This time around, they were up 12%. Expectations were for 6%. So Limited is forming a base here, kind of not buyable at this point. It's still in the base building process, but after hitting an intraday low of 46.30, Limited is now trading at 47.59, up 1.6% on the day. So a pretty good day for shares of Limited. Of course, that's Victoria's Secret and Bath and Body Works, the two big brands at Limited Brands. Target, same-store sales up 3.1%. Pretty good numbers there, too. We'll check in on shares of Target. It is up 2.2% today to 61.98, so good day for Target. The 3.1 same-store sales growth was a little better than what economists were looking for. 2.7% growth was expected. Big disappointment in the retail sector. Let's take a look at specialty retailer Zumiez, which really has a great track record of execution, but this is a retailer that has always been held to a high standard, tends to sell at a higher multiple to its peers, but Zumiez having a tough day today, down 10.3% to $32.24. $32.24 last price on Zumiez. Same-store sales growth of 7.5%, but that was below the consensus estimate of 8.5%. A couple of more retailers to get to. Some other stocks are moving pretty nicely on earnings today. We'll talk about all that when we come back. Ken Shreve with you on TFNN. You're listening to Breakout Investing. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Interesting if we're going to see some buyers come into the close here. Yeah, again, 50-50. Can't really say with conviction that's going to happen, but selling fairly tame in the NASDAQ Composite right now. The tech index only down about 14 points, 0.5%. Dow and S&P 500 moving in lockstep here, both down about 0.9%. The Dow down about 118 points to 12,853. Obviously has given up the 13,000 level, and the S&P 500 down 12.5 points to 1362. Of course, it is going to be very interesting to see how the market responds to the employment numbers. Expectations are so low. I would have to think that if we get a 100,000 print or even better, the market could find some solace in there. But overall, of course, the market's definitely unsettled here. The technicals, the indexes have not broken down yet, but the foundation is clearly unsettled. And when you have so much money on the sidelines, it's no wonder the foundation is unsettled. What makes a foundation firm, or what gives a market on terra firma, so to speak, is when there's money coming in from the sidelines. It provides a good foundation. Stocks tend to trade in less volatile fashion, and that's is clearly not happening right now, which is what is making for this difficult environment. So that's what's going on. Let's check in on crude oil here, down 2% to 87.13 a barrel. Let's check in on the United States Oil Fund. This basically tracks the spot price of West Texas intermediate light sweet crude, still holding above its 50-day moving average here today, but down 1.8% to 32.56. That's the USO ETF, United States Oil Fund. And then we also have gold down a little bit today, down $16.60, 1% to $15.90. $1,590.70 an ounce for gold bullion. The GLD here, liquid gold ETF, it is down 0.6% to 154.14, back below its 50-day moving average here. This U.S. dollar, boy, it just does not want to go down. 83.36 last on the U.S. dollar index. That's up about 30 ticks or so, 0.4%. Check in on the UUP. This is the PowerShares Deutsche Bank U.S. Dollar Index Bullish Fund. And let's see here if we can pull that up. There's the UUP. Looked like it was going to try to break through its 50-day moving average. Still not out of the question that it could happen in the near term. If it does, you think that would help the major averages here. But big upside reversal yesterday for the UUP, finishes up near its session high, closes above the 50-day moving average. Extends gains today, but not by much. UUP up 4 cents to 22.91. The 50-day moving average for the UUP is 22.79. So only about 12 cents above its 50-day moving average here. So that's the UUP. And bonds. Bonds equally stubborn. The TLT, this is the iShares Barclays 20-plus year Treasury bond fund, also holding its 50-day moving average here. Can you imagine, what would happen when money finally starts coming out of bonds? All these short bond calls, if it comes to fruition, that is going to be when you start seeing money coming in from the sidelines. But until this TLT breaks down, yeah, it's could be just going to be a headwind out there. So TLT continuing to hold above its 50-day moving average, last around 129.68, up 0.7%. So we talked about some pretty decent same-store sales data from a lot of the nation's retailers. The news was not good at Abercrombie and Fitch. They cut their annual earnings forecast, citing an anticipated drop in same-store sales in the second half of the year. Sales fell 5% in the U.S. Same-store sales, that is, this time around fell 5% in the U.S. and 26% internationally. And the company is looking for same-store sales to drop 10% in the second half of the year. This has really weighed on shares of Abercrombie today. Stock is down 13.5% to $29.42. Abercrombie had tried to come off its lows of around 30, had rallied up to about 36, back above its 50-day moving average, but is as broken as they get at this point. So Abercrombie looking like dead money for a while. Tell you what, we'll check in on shares of Portfolio Recovery Associates. We'll get into the details. Stock with a big short position here, first of all, but also excellent fundamentals, unique business. Stock is up 17.8% today to $100.32. Big gap up on strong earnings. We'll talk about Portfolio Recovery Associates when we come back. Ken Shreve with you on TFNN. Stick with me.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Let's talk about Portfolio Recovery Associates, because this has always been a stock that has good track record of execution here. Nice breakout today over $91.64. You've seen a lot of this lately, though, these big gaps up in price. You see a stock technically holding up well ahead of earnings, and then you say, well, do I want to buy it a day before earnings? Folks, that is generally very bad practice, and your winning percentage there is going to be 50-50 at best, and that's really no edge. So typically best to just kind of wait and see what a company has to say, unless you want to throw the dice and hope they come out with good earnings. If you did that yesterday with Portfolio Recovery Associates, you'll be doing real well today, but just sort of an unnecessary gamble, I think. So I generally do not buy stocks so close to earnings, but Portfolio Recovery Associates, again, nice breakout over 91.64, big gap up for the stock, trading up 18% to $100.32. This is a company that deals in the purchase, collection, and management of portfolios of defaulted consumer receivables. Earnings were up 30% to $1.87 a share. Sales were up 29% to about $148 million. Big short interest in PRAA going into today. As of July 13th, 2.6 million shares were held short. Remember, this is a stock with an average daily volume of just 130,000. So, big short interest. So probably some short covering today, but credit to the company for delivering a pretty darn good quarter. Let's take a look at shares of Ansys. This is a company that does engineering simulation software used by car makers, aerospace, defense companies, medical device makers, and such. Ansys, big day for this stock as well, up 10.5% to 66.22. What you have here is a double bottom breakout. You haven't seen many double bottom breakouts here, but this is a good time. Let's go over what a double bottom breakout looks like. And you can see this chart has the appearance of the letter W. You have a leg down, rally back, another leg down that undercuts the first leg down here. If you're watching on Tiger TV, you'll see this very clearly, and then a breakout. So the swing point here was 66.91. That's the middle portion of the base right here. It's at 66.21, so it hasn't broken out with conviction, but still a big strong move for the stock today. Compelling here, no doubt about it, because of the strong earnings report. So a couple of nice earnings stories there. Switch gears a little bit, talk about economic data today. Had a couple of small pieces of news. Weekly jobless claims were up 8,000 to 365,000. The prior week was revised slightly higher to 357,000. Also, factory orders. They fell unexpectedly in June. Orders dropped 0.5% after increasing 0.5% in May. The Briefing.com consensus estimate was looking for orders to increase 0.6%. So an unexpected decline in factory orders. They've definitely been softening in recent months, no doubt about it. Of course, tomorrow, non-farm payrolls for July. Again, the number is expected to be around 100,000. Unemployment rate steady at 8.2%. Does the market rally on a better than expected report, or does it fall on another disappointing print? Boy, tough call, isn't it? Markets just has been filled with tough calls in recent weeks. Volatility has been very difficult to play, but as I've been writing and telling people, I sent an alert out today, just reminding people that until we start to see money come in from the sidelines, it certainly hasn't been happening. Nothing wrong with being patient here. I find that when you force the issue and you try to make money when the environment is not quite right to make consistent money in stocks, that's when you tend to lose money. And in fact, you're having to cut losses more often than you might like to. So better just to sit tight and wait for overall market conditions to improve. One of my favorite healthcare names here. Let's take a look at shares of DaVita. They reported earnings late Wednesday. Stock's under a little bit of pressure. You can see a big move during the month of June. Basically made a move from 80 up to $96, $97. Has been consolidating gains recently. DaVita down 1.4% today. Not too bad. Not volume not excessive either. Trading right now around 97.25. DaVita, they're an operator of dialysis centers in 40 plus states in the In the U.S., earnings at DaVita up 27% to $1.49 a share. Sales up 16% to $1.9 billion. So still holding nicely above its 200-day moving average. Looks like this stock is ready to base for a little while. Would rather let it consolidate gains, move sideways, see if a proper base forms here. But this is a good high-quality company with decent earnings report as well. Not such a great story at LivePerson. This has been really a nice small cap performer in the market. You see riding its 50-day moving average higher in recent weeks, but LivePerson really getting hit hard today. Down $1.75. That's almost 10%. It is trading up near its high for the day, despite a 10% loss. It hit an intraday low of $14.14. I mean, just really crushed. Now trading around $16.18. Its intraday high is $16.44. So buyers definitely came in thinking that the selling was overdone here. LivePerson is a provider of online sales, marketing, customer service software. And before today, actually yesterday, it came down to its 50-day moving average, closed a little bit below the line ahead of earnings, but technically hadn't been acting that bad at all. The problem here, earnings were down 38% from a year ago to 5 cents a share. The estimate was for 9 cents a share, so they missed earnings by 4 cents. Sales were up 21% to $38.5 million. This is a broken stock as well right now. Going to take some time for the stock to repair the technical damage done today. Sturm Ruger, firearm maker, great bottom line and top line growth. Unfortunately, the stock is having a wild day of trading here. Down 6.4% to $45.99. Sturm Ruger had been building the right side of a base here, trying to get closer to its prior high of 58, and a lot of sellers in the stock today. Big intraday trading range here too. A lot of volatility. Hits a high of 48.84, a low of 42.19, so a intraday trading range of about $6.50 or so. Down $3.13, 6.4% to $45.99. Hey, this company's making a lot of money, selling a lot of guns, that's for sure. Earnings were up 63% from a year ago to 91 cents a share. They beat estimates by 19 cents. I mean, so it was a good beat on the bottom line. Sales were up 50% to $119.6 million. The estimate was for $96.7 million. So big beat on the bottom line and top line. Tough to please investors in this type of market environment. So investors taking the opportunity to sell the news today in shares of Sturm Ruger. Let's take a look at another healthcare name under some pressure here, Thoratec. Thoratec makes medical devices used for circulatory support, pumps, and the like. Big deceleration in earnings and sales growth here. Not surprising to see the stock responding the way it is. Earnings were only up 2% from a year ago to 45 cents a share. Sales were up 7% to $118.7 million. So big slowdown in growth from the prior quarter. That always makes investors a little uneasy. Shares of Thoratec right now down 6.3% to $31.85. Elsewhere in the earnings picture, we can take a look at shares of Teradata. Teradata is having actually a pretty good day. This was a stock under a lot of pressure, and this is it's a data warehousing play, but had been consolidating gains since May, had been finding recent resistance at its 50-day moving average, and it looks like it's doing it again here. Teradata right now up 1.5% to 67.10 after hitting an intraday high of 69.63. Not a great day of trading. I mean, outperforming the market here. The earnings weren't bad, up 28% from a year ago. Sales were up 14% to $665 million. But this is a stock that is, just judging by the way it's trading today, you do got some volume in the stock, but there are sellers around too, because it's trading well off its highs and still stuck underneath its 50-day moving average here. So Teradata still looks like it's a bit tired. Moving on, taking a look at shares of DirecTV. Sure, we've got a lot of DirecTV subscribers in the listening audience out there, but stocks under pressure today, down 2.7% to 48 48.75. DirecTV still holding above its 50-day moving average here. At the end of the second quarter, DirecTV had about 9.1 million subscribers in Latin America, 19.9 million in the U.S. They lost 52,000 subscribers in the quarter in the U.S., but Latin America subscribers rose 37% to 645,000. So Latin America is where the growth story is for DirecTV. Earnings were up 20% to $1.09 a share. Sales up 9% to $7.2 billion. So fickle market. DirecTV showing decent relative price strength ahead of the earnings today, and the report didn't seem too bad, but sellers in the stock today down 2.7% to 48.75. Let's check in on TWC as well, kind of a similar business here. Time Warner Cable, nice day. A lot of buyers around in Time Warner Cable. Up 3%, trading near its session high to 88.13. Nice earnings report from this company as well. Second straight quarter of accelerating sales growth at Time Warner. That's always a good sign. Revenues were up 9% to $5.4 billion. Take a look at some of these fertilizer names as well. CF Industries, again, going to be reporting earnings on August 6th. It is still holding above its 50-day moving average, but working on 5 declines in the past 6 trading sessions. So sellers seem to be gaining the upper hand here. Shares of CF Industries down $1 today, 0.5% to $194.52. Again, earnings due August 6th. And we also have earnings coming up. I don't have the date, but I know it's coming up very soon. Within the next few days, shares of Agrium also set to report earnings. And right now it is down $0.01 to 94.14. All right, 877-927-6648. Let's go to Joe in Boston. Joe, how you doing today?
I'm doing well, Ken. How are you?
Not bad, man. Not bad. Just trying to navigate this market. What stock you want to look at today?
It's definitely the deep end of the pool.
Okay. Is this Toyota?
Yeah. Well, this isn't. My question is on this. I'm looking at the last 3 days here, and you see how you have like stealth volume coming in, but it's not moving.
Okay.
What do you read? Do you read into that at all?
Well, normally when you have very, very heavy volume and the stock is having a hard time moving, that's typically more concerning when you're up near a high. That's what O'Neill over at IBD, he'll call that churning a lot. So when a stock is near a high and it's churning and there's buying demand but the stock isn't moving, that's often a sign that the stock is probably going to pull back. When it occurs deep inside a base like this, which is what Toyota Motor is doing, all this tells me is that there's just a lot of overhead supply. Some of these people that bought the stock back in July, remember when it was trading up around $81 a share, and then it came down in price, and now it's trying to work its way higher. Well, all the people that bought from 80, 79, 78, 77, to me it just looks like it's just trying to work through overhead supply here, and that's why it's kind of a tough road back when a stock gets beaten down like Toyota Motor has been beaten down in recent weeks.
Right. Now, would you use 81.12 as a swing if it started moving up through that area with some volume? Or no, you go look at that 87.
Yeah, let me see here. That's kind of far away. I mean, I would actually say that you could even look at the the fact that it's above its 50-day moving average here is a good sign.
Right.
But you had an earlier swing at 77. It's trading right around that swing right now. The problem is it's just not really making meaningful progress. The next one after that, would be that 81 that 81 price level. So
what I've often found is sometimes in these bigger names, sometimes you get 3 or 4 or 5 bars of big volume, and it doesn't go anywhere, and then 2-3 weeks down the line, it starts moving. I remember I called you back in March. Remember I called you about Coke, and it was like just a boring, and I was like, there was some big volume, but it really didn't go anywhere when it was down like around 69.
And then it started moving.
And then it just took off.
And now it's one of the best performers in the Dow. Yeah. Well, this one, I don't follow the car makers that much, so I don't know much about Toyota's fundamentals, like how they're doing. The car sales came out yesterday, but I didn't see Toyota's numbers. But hey, there's some accumulation going on, so keep an eye on it, definitely.
All right, I know it's not in your wheelhouse, but I figured I'd kind of throw you off your base a little bit.
Hey man, always appreciate the call, Joe.
Thanks.
All right, take care. All right, Joe from Boston. Yeah, a little curveball here with Toyota Motor. That's okay. I always appreciate calls from Joe in Boston. All right, folks, headed into the final break. Thanks for sticking with me. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks. Major averages trying to come off their lows here as we head into the close. Dow right now down 97 points to 12,873. NASDAQ only down 11 points now to 2908, and the S&P 500 down about 11 points to 1364. So all in all, considering the market had expectations from the Fed yesterday, and the market certainly had expectations from Mario Draghi earlier today, the fact that the tech index is only down about 0.4%, Dow and S&P down about 0.75%. Fairly tame selling. Didn't mention the volume. We do have a little bit of volume in the NASDAQ today, tracking a little bit higher than the 1.69 billion shares we saw on Wednesday. Of course, NYSE volume yesterday was skewed because of this night Capital Group trading error. So we had just over 1 billion trade on the New York Stock Exchange, which typically is very heavy, but again, that is skewed. Of course, we are tracking about 25-30% below that level on the NYSE today. So doesn't really feel like distribution in the market today. Of course, we'll see what the jobs report has in store Friday morning. I want to take a look at some names as we head into the close here, holding up pretty well. Athena Health, a high-quality company here. They provide billing, collections, medical management software for physician practices. Really like this sideways trading here after a big move higher. Let's check on the weekly chart here, and this is what a technically healthy stock looks like. Definitely one to watch here. You see the big move it made right in this area here, breakout from what looks like a cup with high handle type of pattern. Here's the start of the base here. Big breakout, not last week but the week before, and then holding on to its gains smartly here. So Athena Health front and center on my watch list here. Solar Winds also showing very similar action here, holding gains smartly here. Big earnings from Solar Winds not that long ago. Right now, stock is up 1.3% to 53.08. Let's take a look at a weekly chart for Solar Winds as well. And what you see here is, see this big move last week, and then look at that tight, just holding gains beautifully. Very strong technicals, not only for Athena Health and Solar Winds as well. Take a look at NSM, Nation Star Mortgage Holdings. This is a recent new issue. Stock is up nicely today, up 5.9% to 23.63. Let's move over and take a look at a weekly chart for Nation Star Mortgage Holdings, and we'll see good supporting action here at the 10-week moving average here. So, if I felt comfortable about this uptrend, all of these stocks are, in my roundhouse here. I like the way Athena Health is trading, like the way Solar Winds is trading, like the way Nation Star Mortgage Holdings, all three exceptional growth stocks with excellent fundamentals and excellent technicals. Picking up a stock off the 10-week moving average is not bad practice either. Nation Star Mortgage Holdings, NSM, showing good supporting action at its 10-week line. Remember, just recently we had pretty decent earnings from Herbalife. Well, USANA is another network marketer here, USNA. Another stock acting very, very well in this market, up 2.4% today to 44.93. Let's look at a weekly chart for USANA. And again, another stock, big move last week, holding gains very nicely this week. USANA, again, network marketer, vitamin, mineral supplements, health foods, skincare products, very similar company to Herbalife. So coming up after the close, folks, let's check in on LinkedIn. I'm very interested to see what LinkedIn has to say. This is, I think, an excellent company, just looking very vulnerable here ahead of earnings. Expecting good bottom line and top line growth from LinkedIn. Stock is down 2% to 93.61 ahead of the results. Coming up next, the Tom O'Brien Show from 4 to 6 Eastern. I'll see you back here tomorrow with another edition of Breakout Investing from 3 to 4 Eastern. Have a great afternoon, everyone.